So we are about halfway through 2025, and I am long overdue to bring a new market update. So here is the latest edition of the Russell Recap, which may be the most important installment yet. So I said that this edition of the Russell Recap is going to be the most important edition, and it feels that way just because over the last 6 months, we have seen a very dramatic change in the local area real estate market. And so today I'm going to kind of review 3 areas. I'm going to break it down. And as I always say at the start of these videos, if you don't like charts, graphs, numbers, and the sound of my voice, this probably isn't for you. But if you want my take on what's really happening out there in the local market and the overall larger US real estate market, I hope you find this helpful. So the first point we're going to tackle is inventory. Inventory has been the big game changer. Think about anything economically, right? If it's a car that you want to buy, maybe boats that you're interested in. Specifically here, there haven't been any boats on lots for a few years, and now all of a sudden you're starting to see them stack up. Cars are starting to stack up again. And so as supply increases, the price will decrease, and in some cases, demand continues to ease. And so take a look at this really compelling set of graphs. You can see here that in the US that we have over 1 million homes on the market for the first time in quite some time. And that is a lot of properties historically, especially when you look back to 2022 and see we had in March of 2022 less than 300,000 properties. So what I'm telling people is now nationwide there's almost 3 houses available to every one from just 2 to 3 years ago. That's a very big difference. And if you look up at the top, you can kind of see these gray lines. 2017, 2018, 2019, that was kind of a very normal, evenly balanced market. It was a great business environment, a lot of great home selling, steady appreciation, but just no real big market headlines. And then you kind of see this chart that shows 2020 highlighted, and you see inventory start to plummet. It was already trending down at the end of 2019, and as the pandemic occurred, the inventory nationally really decreased. And that trend only strengthened throughout 21, 22, and also a good portion of 2023. So we had below average homes, we had higher than average demand, we had lower than normal interest rates at 2 and 3%. So you just saw this huge buying frenzy, right? And look at the stark difference now. You can see this graph highlights the beginning of 2025 up to May of this year. And you can see that we're up 31.5% year over year. And you can see that that line is kind of extrapolating towards more of 2017, 2018, and 2019. So we basically went into high gear after COVID, and we're basically shifting back to equal to 2017, 2018, and maybe even a little bit higher inventory than those years. So it's just been a very drastic amount of change in a short period of time. So continuing to talk about our first point, which is inventory, as you can see in this next graph, you can see how inventory is growing in different parts of the country. And year over year, it's up across the country everywhere. It's most pronounced in the South, which is our market, and then along the West Coast, and those 2 areas are no surprise. But still lagging behind their pre-pandemic levels are the Midwest and Northeast. So those markets are actually a little bit tighter. They're performing a little bit better right now nationally. But you can see that inventory has surged in the South and West and is even now exceeding pre-pandemic levels. So we're getting back to that very normal feel. And so the expectation that you had pre-pandemic would be more of a normal frame of mind for a seller right now. To further underscore the point on this next graph, you can see visually, it just helps. This is the active listing count in the US going back to 2021, where we had less than 500,000 properties available. And now we have more than double that in 2025. So again, just a dramatic surge. And in some market areas, there's more inventory like we just covered. So that's great, Drew. You're saying, I understand what's happening nationally, but the reason I'm watching this video is I want to know what's happening in Sarasota, Manatee County, and I'm glad you asked. That brings me to my next graph, which you can see probably the most pronounced difference in terms of inventory that is even stronger and more pronounced than nationally. Look at these local numbers. You can see that going back to January 2015, this is a 10-year chart. You can see that we hovered anywhere between maybe 11,000 to 15,000 listings pre-pandemic. Then we cratered to below 5,000 listings in the two-county area. And as of the beginning of this year, we're almost at 20,000 listings. This is an amount of inventory that our market has never seen historically, not pre-pandemic, not ever. And so what you're seeing is just kind of a major shift in adjustment in the market. And we've seen that in the form of changing prices and lessening transactions. That brings me to the second segment of this video. So the second segment of this is going to be focused on expectations. So first it was inventory. That's changed a lot. Number two is expectations. And those have changed a whole lot. Buyer expectations have changed and seller expectations have changed. Take a look at just the sheer amount of transactions that are occurring nationally. Look at how much home sales have decreased. We're looking at a difference of almost 2.5 million sales across the nation between 2021 into 2025. So that velocity is almost a third of the market now that was existing and buying homes, people that were in the market. Those sales are not transacting. And the evidence that's out there isn't that people don't want to buy homes. That is not the case. There are plenty of people that would like to buy a home, but because of the price run up post-pandemic, because of current interest rates, because of wages not keeping up with inflation, all kinds of reasons, a house is just so much less affordable in most parts of the US than it was pre-pandemic. So again, we're still short on housing units nationally, but people are unable to afford these units, and that is what's causing kind of pricing adjustment. And as you can see on this next chart, you can see basically there is a huge gap in expectations. If you look all the way at the right-hand side of this chart, you can see pretty much the biggest gap we've seen in the last 5 years between median sales and median asking prices. So sellers are still pricing on current comps or comps from 6 months ago. They're hoping to get a much higher sale price than what's realistic. And what we're seeing in a lot of cases is that we have to get in front of the comps. Think about it. If the market is kind of going the wrong way and we continue to price along previous sales, it's going to be very hard to transact sales and catch up to a market that is slowly decreasing. So what you're seeing is when sellers start to understand where the buyer's mentality is, that's where deals are coming together. Also, regarding expectations, you can see on my next chart here that, look at kind of, this is our median sale price in the two-county, Sarasota, Manatee County area. And you can kind of see the high point was 2022. We kind of know that now. And if you were to kind of take a ruler and draw a line, you can see that it's down maybe 10 to 15% from the peak. That still does not account for the massive run-up that you see from 2019 to 2022. Prices almost doubled in that time period. So most sellers have increased their equity so greatly. And I think what you have to realize from an expectation standpoint is there's less of that equity today than there was 2 to 3 years ago. That's just a fact. The affordability isn't there. There's more competition. There's a variety of reasons for that. But you can see we're still so much further above than what we were a few years ago, but prices have peeled back about 10 or 15% across the board. Further to expectations is for the last, 18 months, I feel like there was this prevailing thought that rates were going to go down and give buyers some relief. And with what's been going on in the economy, most economists, most real estate people are projecting really no meaningful difference in rates. If you look at this last slide, it shows that, mortgage rates may be projected at the end of this year to hover around 6.5%. And they've kind of bounced around between 6.5% and 7.25% for the past couple of years. So the expectation there is that's going to stay the same. So if buyers that can't afford to buy a house with the current rates and the current prices want to buy, and we know that interest rates aren't changing, to affect sales, we are seeing price adjustments. And those sellers that are adjusting prices are becoming very successful. And that leads me to my third and final word for today. So we covered inventory, we covered changing expectations, and now we're going to talk about results. So I'm very proud of what our small group has been able to do so far this year. We've transacted over $20 million in sales, and we have over another $10 million pending right now. And this was after a very rough hurricane season, a very actually poor start to 2025, but we've had to hang in there with our clients. We've had to have the hard conversations. We've had to adjust prices. We've been able to bring some great buyers into this market, and we're able to perform, and we're able to get the results in this market. So hopefully this information is helpful. Hopefully it shows that, things are changing, and as a buyer and seller in 2025, you have to adapt to these changing realities in the market. And there are still plenty of sales transacting. There are still plenty of strength in this market. But the bottom line is that prices have receded, 10 to 15% probably from the peak. And that is honestly where we are today, with the fact that there is way more choice and way more selection in the market now than ever before. Pricing, condition, and strategy in marketing are all super important. So that's my 2 cents. That's the mid-year Russell recap. Hope you enjoyed it. If you want to talk real estate, have a property you want to buy or sell, please reach out. Thanks so much.